Pleasure to welcome you to today's webinar on supply chain management and transfer pricing. Well, supply chain management and its manifold implications in operational, legal and tax view have been quite a challenge for entrepreneurs with an international focus all the time, but they gained significantly in importance due to the pandemic and the disruptive effects and in light of the change of power in the United States. So many businesses see themselves faced with the necessity to revise and adjust established structures in order to match the new normal and to establish a sustainable and panic-proof foundation for future business. So today we will be happy to provide you with a comprehensive overview on the legal, tax and operational implications of your supply chain and transfer price management. And I'm really happy to not only have my valued colleagues Priya Selvanathan and Michael Wekeza on board as expert speakers, but also Felix Wenzel from Rödl Logistics, who will kindly share his professional insight with us today. As to the schedule, we will have a presentation first by all three expert speakers and round up our session with a Q&A at the end. For you to submit your individual questions. For this purpose, please kindly use the question panel of the webinar tool. And you may do so anytime during the session, whenever a question comes to your mind, because I will be happy to collect all these questions coming in and hand them to the expert speakers at the end during the Q&A session. Last but not least, please kindly note that this session is being recorded and will be made available online later on for you and your colleagues to recap anytime you wish on our company website and our LinkedIn channel. So looking forward to an enlightening session. It is now my pleasure to leave the stage to Felix Wenzel. Thank you.
Yes, a very good afternoon, I have to say, because it is in Southeast Asia, even though I'm still sitting or I am sitting in Hamburg. I have the pleasure today to introduce you to the very broad fundamentals of supply chain management and give you some insights into the logistics, or specifically the challenges of today's logistics. We will start with a broad overview of the supply chain and supply chain management and go from there into supply chain mechanisms, internal and external factors, an example of a supply chain, and from there on into probably my specialty, transport and logistics, with some of the major influences of today's environment. Not only COVID, but more shortages in equipment and congestions. I will start with the definition of a supply chain. It's a very simple one. I've looked it up. A supply chain is a network between a company and its suppliers to produce and distribute a specific product to the final buyer. I think it is very essential to understand that this can either be a product or a service that is moved along the value chain of creating a specific product or service until it reaches its final customer or buyer. The supply chain management aspect of that is that we keep the supply chain visual, that we keep a good overview of the supply chain, and that we manage the flow of goods and services along the supply chain, meaning managing it as a holistic, in a holistic approach. From the slide in front of you, you can actually see an example of that. It's a very broad-based example. We've tried to keep it very simple and capture the most dominant factors of the chain. I think it is a broad statement that supply chain management results in lower cost and faster production, and I think overall it's very apparent in today's environment that supply chain management is an essential part of our everyday doing. We find this in more or less every manufacturing process, every distribution process, and every product we purchase or consume. There is some kind of supply chain management or supply chain involved. This includes or is directly linked to the company strategy, which of course defines the product in itself and the product placement, and at the end of the day, the buyer target group, and therefore the sales and marketing behind it. It has a lot to do with distribution channels to get to that final buyer, my apologies, and financing of such operation, because as you can see from research and development down to the final retailer, there is a lot of steps involved, such as infrastructure and logistics, and the procurement of such, which we in logistics happily enjoy, but it also is prone to some external factors, such as the economic stability and the political stability. I think I'm not teaching you anything new when I say that it has been very apparent over the last year that the economic stability and the political stability are a very crucial factor of our everyday life. Political stability, I think we've just seen how important it is to have a stable government or have stable governments across the globe, and with the change in the US, we have most certainly seen quite an array of political endeavors that happened there, and the economic stability, I think, in times of Corona in the last year has been ever so apparent. I have this morning had a discussion with our South African and their economy or their GDP is down by 51% and 67% in the transport and logistics sector, which I find enormously heavy. The impacts are strong, and I think everyone around the globe notices those impacts and realizes how important it is to regain this economic stability, and how important it is to move forward towards a flow of goods, flow of cargo, reopening of retail, and getting the economy back on track. 1 second. I have therefore decided to take a very simple example of a supply chain, which is vaccines. I think most of you are following that trend or that development very closely, and I thought I move along the vaccines through these 6 steps that you see here on the board, and this actually shows you how a different product can have different core focuses on different aspects of a supply chain. A vaccine, when we take the corona vaccine, for example, we actually start at the very left side with research and development. In logistics, not that much of a deal, but becoming more and more evident. But for vaccine, I think that's the bread and butter for their actual product, which is the vaccine. For the corona vaccine, it was actually quite interesting that most of the research and development comes from the SARS and MERS viruses that we have experienced in 2002 and 2010, I believe. The design of a vaccine is more of a product specification and then goes into manufacturing. What we see in the EU very clearly at the moment with AstraZeneca is that it has a lot of politics and economic impact on how this is distributed, but also how the manufacturing process works, and what is expected of those companies, and how they are either supported or not supported, cleared for usage or not cleared for usage. So here we see a perfect picture of how external factors have an impact on a supply chain, and then go into logistics. When we talk about logistics for the vaccines, I think the BioNTech Pfizer vaccine is a very, very interesting one, because it needs to be transported at below minus 70 degrees Celsius, so minus 70 degrees Celsius. I don't think there are any reefer containers that you can actually set up that far. So the logistical requirements to move the vaccine is very, very complex, and it cannot just simply be put on a boat and sent out, or put in an airplane and sent out, because the time that it has during transit in a lower than minus 70 degrees or warmer than minus 70 degrees Celsius environment has an enormous impact on the quality of the vaccine. I believe the sales and retail, when we look at the corona vaccine, is actually a fact that can somewhat be ignored, because we all want the vaccine, or most of us want the vaccine, and so the retail part of it, more or less, is more of a logistical challenge, how to vaccinate the entire population, big part of the population, 80 million people in Germany, 1 billion people in China. So I think the vaccines give you a very, very interesting insight into a very basic function of a supply chain. There is a lot of things that can impact the supply chain and go and create a hurdle or a barrier of entry, or a success to be a good product. I would like now to go away from the supply chain and focus on the area of logistics. At the end of the day, that's where I come from, that's what I've studied, that's what I've learned, and that's where I spent my daily life with. Just a few facts about logistics. Annually, we move around 165 million 20-foot equivalent units, so 20-foot containers around the globe, and 54 million metric tons of air freight are traveling the globe on an annual basis. That is quite a lot, but not in today's environment. You all probably face a lot of challenges within your supply chain, especially in the sector of logistics, whether that happens in warehouses, hubs, transshipment ports, or the finding of equipment, meaning containers or air freight space. So within your products and your product distribution or your product deliveries to your customers, you will find that space is tight, rates are high, and often the flow of goods does not happen as it should. And also this morning, for example, we were supposed to deliver a shipment of masks, FFP2 masks, to a pharmacy in Germany, online pharmacy in Germany, and customs decided to take a look at them, and they have given us an appointment on Friday, so we will not be able to deliver these goods before Friday, simply because customs is a little bit understaffed, and once again you have an external factor that decides the outcome of your supply chain and your deliveries. So our customer, the pharmacy, does not get their products until Friday, and they're running into a stock out scenario by Thursday night, Friday morning. So we are already looking at various ways on how we can solve that. A very hands-on example of the challenges that we in the logistics and you as a customer of ours face on a daily basis. It doesn't really matter where you sit in the world at the moment, whether that is the Americas, Europe, Africa, Asia, or Australia. It is very, very dominant that you're not getting either your goods out or you're not getting your goods in. That has various factors. I think that started probably around a year ago when China went into a complete shutdown and stopped all their production due to the coronavirus, and that means that the container flow is hindered through the chain, and where containers are delivered to the factories, they're not loaded, or they are already loaded but they're not shipped out. So at some stages, the Chinese port was so overfilled that they basically didn't handle any more ships, and the vessels had to wait outside the port to be entered and cleared. What does that mean? That means that cargo is not moving into the US or the American markets and the Australian markets or the European markets, and therefore the container shortage moves out into those around the globe and into those markets, and then the equipment is tight, bringing up the rates, because when the equipment is tight, you have to make sure you get the space, and the space costs money, which we do see in the operators of vessels making, in my opinion, supernormal profits, but that is up to discussion. I'm sure they don't think so. They would call that healthy profits. But cutting a long story short, I would say that within the supply chain, we do see those hurdles, and this container shifts and shortages of container, they've moved somewhat through the year, but especially with the second lockdowns across the globes, further escalated the scenarios, further escalated the situation that containers are not available for exports, for loading, and therefore your goods are simply waiting for space. The vessels are completely overbooked. I've had the pleasure of visiting a Malaysian port later last year, and they had about 65,000 containers just standing on the side, waiting to be shipped to Chinese ports to be exported from a Chinese port, because the yield of those movements were a lot higher, and the cargo requirements were a lot higher. I think there recently was an article in the Handelsblatt about the movement or the shortage of supply of circuit boards in the automotive industry, and these circuit boards move mostly from China and Southeast Asia, and we see already the situations out of China and Southeast Asia having an impact on European production cycles, and therefore their supply chain. The same thing applies to air freight. You all know, or you probably haven't flown a lot in 2020. I haven't. It is very well. Firstly, you don't get direct flights like you used to. I think a year ago we were all more or less in scenarios where we could decide that we fly next week to more or less any airport in the world, and there would be an option to fly within a day. Even from Kuala Lumpur, I think there's three flights with each airline, more or less, to go to the Middle East and then to Europe, or but you have more or less daily routes and different providers, and you have a lot of choice. And in these days, or for the last year, the choice of air freight or of air travel is severely slowed down. Again, that has an impact on your cargo movement. A lot of your day-to-day cargo moves on air freight and on passenger flights specifically. And China had, for example, restrictions of certain flight routes being only flown once in a week, and airlines just had to simply cut their flight and travel schedules, simply because no passenger was flying. And passengers make around about 90% of their profits, or their revenues in the first place, So not having 90%, I think it's very not sustainable to live on 10% of your earnings. We have seen shifts by a lot of airlines removing seats from passenger airplanes to move them into a more cargo operation, but that only covers so much when I think over 60% of the global fleet is on ground. And that, of course, has an impact again on your cargo movement. Connections are not readily available. They're not book and fly. It is more like plan, then book, then plan again, and then fly. We see this, of course, in the air freight rates. It was during, I think, March to June last year was a very common scenario that air freight rates between 12 to 16 euros up to 20 euros a kilo would be asked for a connection from China to Europe. That's 15 to 20 fold of what it normally is. Of course, that does have an impact on the supply chain, but also for the cost of production, for the cost of the product. And yeah, one has to ask themselves, is it actually worth flying, or am I taking, or can I allow myself to book a vessel, a container on a vessel, or even a train from China to Europe? And we see these considerations coming. Trains are overbooked, vessels are overbooked, and planes are overbooked. I've talked earlier about the movement of containers and the shift in container movements. One thing I should add to that is that by now most of the ports are congested. LA, Long Beach port in the US is probably one of the biggest distributors to the North American market. That port is completely blocked. It's full. There's no more capacity. The same applies to most of the UK ports, simply for the Corona and the Brexit scenario. That certain scenarios are very unclear custom-wise. But transshipment ports and such as Singapore, but most of the Asian and Australian ports are also quite full with capacity, and that leads to congestion charges and space shortages on vessels. Sorry. So as you can see, supply chain and supply chain management isn't as easy as one might think, or as it is written as a definition. For me, I want to go very quickly back to the statement of supply chain management results in lower cost and faster production. I always counter that argument because I do believe that supply chain have to match your product, and your product needs a good supply chain to deliver a value to the market. And this value to the market is manifold, and this is something that aligns with your company strategy, but also with your company philosophy. For me, in the preparation of this, I actually have looked it up, and in a study, they have actually found that more than 70% of companies that decided to outsource their logistics found that they've gained an efficiency while remaining or saving cost. So yeah, there is a cost saving element, but if you leave it to the experts, and you also gain the efficiency because they know what they're doing, they know what to do and how to do it. But also you need reliable suppliers. So the cheapest product isn't necessarily the best, and even though you compare three prices with each other, they might not compare apple to apple. And I think it is good to have long-lasting and good relationships with your suppliers, but also your customers. And I think these are in the or I do hope that in the long term, these are values that pass on and deliver through the supply chain, and through every company with a little bit of substance, that we look at who we want to trade with and who we want to work with, and not look at the bottom line figure. I do know the bottom line figure is important, but there has to be value in a supply chain, and I think if you should take anything from this, you really should take that there should be value in a supply chain. And that's my suggestion to you when you talk about logistics and transport. When you understand your transport requirements, talk to your supplier, your logistics or transport provider, and find solution with your transport and logistics provider, and you would be surprised on what they can do for you if you play with open cards. And I'm more than happy to have any questions later on, but I am finished for now. I will pass on to Michael, going in the more legal considerations. I'm off. Thank you very much for your listening, and goodbye.
Okay, thank you very much for that, for the very good first part of our webinar on supply chain, which was very, first of all, very detailed, and secondly, and possibly more importantly, very practical, which I think most of our participants and listeners today are very interested in, to find out how things are on the ground, and what to do, and what sort of factors are important these days in this very complex topic of supply chains. So yes, very warm welcome to the second part, which is more or less trying to make sense out of the vast amount of legal and compliance considerations related to supply chains. Obviously, it is a vast topic and a highly complex topic. So we're talking about compliance, and we're talking about legal, and not just these two items with various subtopics, but we're also talking about possibly having a number of jurisdictions involved in all of this, which means that potentially all these questions double and triple and quadruple with every additional jurisdiction being added to the supply chain, or the equation, as we may say. So, as I said, a very complex topic, a very relevant topic in today in respect of in terms of our 2020-21 pandemic reality, although I think most of the items we're talking about are actually relevant in every given year. It may well be the case that certain of the items we'll be discussing today are simply more, shall we call them, more acute or more pressing of an issue due to the fact that we do live in a time of a global pandemic, and we have considerations which are of a commercial, practical, and legal nature, which indeed may be more pressing than they usually are. So therefore, when we look at all these items, which I try to sort of to list here, so today we're going to, I think in the legal compliance part, we're going to more ask questions, unfortunately, rather than provide answers. Maybe towards the end, a sort of a little conclusion, which will sort of give us a little bit of direction where things are going. But generally speaking, the idea of today is not to have some comprehensive list of items, but simply things which I thought may be very relevant in respect of supply chains going within maybe Southeast Asia, or from Asia going back to Europe. So of course, it will all depend on the practical case. It will depend on your industry, and will depend on the product. I mean, Felix touched upon the vaccine scenario, but I think you could take any given supply chain really, and in one way or the other, all these items will be somehow relevant to to all these supply chains and all these industry, maybe in a specific way, and maybe they will need sort of looking into them in some detail. So I think that's the sort of summary to start us off. And if I may sort of ask the initial question of the legal part of the presentation today. So the overarching, the first question would be supply chain from a legal and compliance point of view. What could possibly go wrong? And I guess the answer is may unfortunately be in this particular case, if you're not prepared and if you're not doing your homework, potentially quite a lot. So here we are. I think we can move on maybe to the another slide to go into some more detail. Yeah, the first item I think is my sort of favorite item, although it may not be that the most relevant for every single supply chain. But I think on this one, because it affects everyone in a chain of supply, we should possibly spend some time on this particular one and have a little look at the items which you may encounter in respect of various warranty and product liability issues. I mean, these terms are used in different ways. So I mean, people use it in one way or the other. What I always sort of think about when I speak about warranty is more or less the scenario where we have a product which is transported and sold along a supply chain, which then at some point breaks, and there's a right to exchange a product, or to get a refund, or potentially to repair it, depending on the product and the industry and so on. Product liability is usually more complex and a sort of more tricky area. So product liability, the way I use the term, is basically the scenario where we have a product which has caused some damage to someone. So I mean, if you take the vaccine scenario, I mean, this is sort of extremely complicated. I mean, you could take I don't know, think about a T-shirt possibly being sold. Even then, you could encounter two of the scenarios. The first one would be T-shirt is broken or sort of defective or not fit for purpose, and the product liability would be the case where you have the scenario where the T-shirt has been I don't know, soaked in some chemicals to make it more durable or something, and then causes some personal injury and possibly skin irritation or something like that, and someone wants to make a claim in this respect. So all these things need to be thought about when thinking about warranty and product liability cases in all the jurisdictions involved in the supply chain, or at least in the jurisdiction where the consumer or the end user, shall we say, is based. So the first item would be, if we're talking about consumers is usually, that's the trickiest part, consumer business, because we have not every country, but many countries, in particular the Western world. If you look at Europe or possibly the US, all these countries do have quite extensive consumer protection legislation, and everyone being involved in a supply chain needs to at least double check whether his or her own organization is affected by any consumer protection legislation. So there can be various issues related to this, because there are mandatory consumer protection laws in many countries, which a company involved in the supply chain cannot necessarily escape. So, for example, there are many countries, if you think about the warranty, many countries provide for a compulsory strict liability in respect of warranty claims. This means, it's a technical term, but effectively it means that whoever sells things in a given jurisdiction has to prove that the product was not defective, rather than the consumer having to prove that there was a problem with the product, if you see the difference. So obviously, if you're in a jurisdiction where this is the case, then the documentation, possibly the limitation of liability and the standard terms would need to be thought about quite carefully to reflect these things. Quite often you also find a piece of consumer protection legislation, which is that regardless of what law and jurisdiction is agreed in the contractual documentation between the supplier and the consumer, effectively the consumer has always the right to put a claim in a local court of the consumer's domicile to pursue a claim which is related to possibly warranty and product liability. So depending again on your business and where you're involved in the supply chain, if this is the case, then obviously one needs to think about how to deal with this scenario. The next item to consider is again, this is more of a product liability case again. So which entity, who in the supply chain is liable for what? Again, the answer to this will be most likely given by the local legislation of the country in which the consumer or the end user is based. If you want to know an example from Malaysia, for example, then there are usually 3 entities, and this is sort of a similar item which you find in many countries around the world. There are usually 3 entities which may be liable and may be sued in connection with product liability, and this is usually the importer and the manufacturer, even if the manufacturer is foreign, not based in the country, or I would call them probably not the right technical term, the brander. So it's the person who, so the organization which sells, not necessarily manufactures, but puts on a brand on the particular product. So this would be the case of contract manufacturing, where the manufacturer is organization A and the organization providing the brand is B, and also this organization may be liable in this respect. So obviously, the sort of the way to manage this thing in terms of warranty and product liability is to, if you imagine a supply chain, depending who you've got there. So you've got the manufacturer at the beginning, then you would have an importer, an exporter, importer, wholesaler, retailer, and so on, and possibly logistics provider providing some services along the line. But effectively, the whole thing would be sort of a chain of contracts. So one chain in the supply chain having a contract with the other. So in order to address all these things which I just mentioned, I mean, there isn't an easy way of doing that. So effectively, one has to look at the supply chain and the contractual relationships, and make sure that the risk are sort of it's by way of contractual risk management. And effectively, one has to make sure that the risk is allocated, for example, by having a chain of indemnities in these contracts for specific cases, that the risk is moved, if possible, if allowed by local legislation, to the right part of the supply chain. So and the right part of the supply chain, obviously that would be very subjective, because everyone will say, well, actually that shouldn't be me, it should be someone else in the supply chain. But this is sort of part of the contractual risk management, to negotiate terms and then obviously document all these terms properly, that the risk will be at the risk, suffering from a product liability claim, for example, or a warranty claim, will be at the desirable chain of the supply chain, and possibly away from one's own organization. So maybe 2 sort of final points on the warranty and product liability aspects. Insurance cover is obviously very important to see what sort of magnitude of claims could I possibly be facing as an organization. On one side, is it worthwhile insuring this risk? And obviously the other side of the coin would be to see if I'm by way of managing my contractual relationships, if I manage to move some risks away from myself, every indemnity will only be as good as the organization or person giving the indemnity. So it may be worthwhile considering whether the person you rely on in respect of the indemnity should be insured in order to be able to meet a claim. An essential item of all contractual documentations and part of this contract risk management item will be limitation of liability, but that's sort of obvious, I suppose, to everyone. But yet again, here it will be different in every country, and it will be different in most countries depending on whether we're talking about documentation prepared for a business to consumer relationship, or whether we're talking about business to business relationship here. So another item which is always worthwhile thinking about in respect of supply chains, which may be sometimes not obvious, in particular when things are bought and sold, it's how to deal with IP infringements. So the scenario is sort of quite obvious one. Certain items are bought by a retailer, for example, who thinks these are, I don't know, genuine products. And then it turns out that that these are not genuine products, have been copied, and some third parties' IP rights have been infringed. And then there's the question, and the retailer faces maybe some legal action from the owner of the IP rights. And then the question is obviously what to do in this situation, what should have been done to prepare for this situation. So again, it is yet again a case of contractual risk management. So first of all, we need to identify the party responsible for design and IP, and again, we need to ensure that the risk is placed at the right chain of the supply chain. So, for example, if a manufacturer claiming it is my IP in the product I'm selling, then it's sort of reasonable to assume that this person may be willing or able to assume the risk if this is not the case. And yet again, think about insurance and think about the fact whether the person giving the indemnity or some contractual assurance can actually back up this promise by commercial means of meeting potential claims. Another short item, which is not on the list, but is just for the sake of completeness, I just wanted to mention is obviously you have in supply chains quite often in distributions and other models. You do have competition and antitrust questions depending on the country or on the market you're dealing with. There are some obvious ones which are usually always not allowed. So the prime example will be price fixing or determining prices along a supply chain within a market. But again, there's an international dimension to it. So competition law only applies to a certain market. So it could be a countries, could be a group of countries like the EU, for example, having its own competition law, but there isn't such an international competition law. So therefore, it always applies within a certain market. But even there, specialist local knowledge is always required, because generally price fixing is a cardinal sin. But there are countries where price fixing is actually prescribed. So, for example, there is this concept in India where they have the so-called MRP, which is the maximum retail price. So on every product which is being sold to consumers, there's an MRP written. So a certain product cannot be sold at a higher price than the MRP, which is, again, sort of maybe if you look at it from a European point of view, slightly strange concept, but it's a means of protecting the consumer. So even this cardinal sin in certain markets can be actually something which needs to be done by way of compliance. So yeah, antitrust I mentioned. So if we go to the next slide and see what other items, dispute resolution, obviously this is always a relevant item when we think about many organizations being involved in the supply chain, and the question here is are the same as in any other contract, but nevertheless, because we're talking here about an international environment, and as we know, supply chains do not stop at the border, but jurisdictions and the reach of courts and legislation do. So a bit of thinking is required usually here to achieve a solution in which contracts can be enforced in a sensible manner. So always the question here is litigation versus arbitration. I mean, that's a sort of common concept. So various considerations go into this, and usually, the outcome should be again documented in some law and jurisdiction clause in your contracts. Litigation is quite popular, especially in countries which with legal system which are not very reliable for various reasons. So quite often it is not reliability in terms of the outcome, but there are many countries, including European countries, where if you go to ordinary courts, the process simply takes extremely long, much longer than arbitration. So speed is one of the reasons why organizations like arbitration, and the other, so that's the efficiency of court system point, and it's basically so efficiency of the court system is one point, and obviously the other point is also to see how if we have an international scenario, how court judgments can be enforced in a given country. So if you're saying a judgment from country A, can it be enforced in country B? Usually, but again, depends on the particular case. In country, usually it's easier to enforce arbitration awards than judgments. And finally, obviously, you need to think if you want to enforce into assets of your business partner. If things go wrong, you need to consider where actually are the assets. Because then if you have a judgment for country A and the assets are in country B, this may not necessarily be helpful. Distribution structure is always a relevant point, although we touched upon it as part of the contractual risk management. Maybe just a sort of a couple of items here. We don't have necessarily much time in order to go into detail here. We have the concepts of agency versus distribution, which are, I suppose, familiar to everyone. We're talking about if you want to do a distribution, undertake a distribution activity in a country, there's always the question, as an organization, do you do it on your own or through a joint venture or through a third party? Every single of these ways is advantages and disadvantages, including in many countries very different licensing or distribution or licensing requirements of distribution operations. So there are countries, for example, where it is not possible to have foreign-owned companies being involved in distribution activities. In other countries, this is subject to permit and so on. So all these things need to be looked at. For the sake of completeness, free trade agreements, again, a vast subject which you could discuss for days and days. It's always useful to, while setting up supply chains, to look at these. Keeping in mind that most free trade agreement systems like ASEAN or maybe the North American one are sort of there and helpful in certain scenarios, but they are certainly not as closely knit as, for example, the European Union. So usually what it requires is a bit of homework to see what sort of products do I have and are they covered by my free trade agreement, where they are taken from country A to country B. Do I get a rebate basically on some customs, on some rates, on tariffs, or am I generally excluded from the tariffs? Are there any local content requirements, and so on and so on. So then we can move to the final slide. Anti-bribery, yes, it's another hot compliance topic these days in Southeast Asia and various other jurisdictions. It's simply something which was subject to quite a lot of recent legislation. So there, for example, there was a few years back, there was an anti-bribery act in the UK, and here in Malaysia, there has been a new amendment to the relevant act, which makes easier to prosecute people involved in all these activities and so on. So it's definitely an item in terms of corporate compliance management. It's definitely an item worth looking into, particularly because we, in many countries, we're moving towards a regime where managers and directors and senior executives are personally liable for acts done within the company, but also by third parties like business partners for on behalf of the company. And US legislation again is just one example. There's sort of many other countries where this is the case. Yes, data protection, again, for the sake of completeness, let's just mention it very briefly. Data protection these days is sort of more or less everywhere. Hardly any countries left where there isn't a comprehensive data protection legislation. So again, this needs to be looked into. What sort of data do I collect along my supply chain? Are we talking about individuals? Are we talking about companies? Are we exporting this data from one place to another, which may trigger some consent legislation? Everyone heard about the GDPR, I suppose, in the European Union. I mean, this seems to be particularly sensitive, so it would be worthwhile thinking, I'm collecting possibly personal data of people living in the EU, and I'm exporting it for the purpose of my supply chain to some other countries, which may trigger compliances or non-compliances, and definitely things which need to be looked into. Finally, we've got employment, HR, health and safety, and so on. Obviously, at any stage in a supply chain, consider, if you're employing people on the way, consider local employment legislation in any given country for the purpose of employment and labor law. But also these days there's again, sort of, it's another hot topic, which is legislation in various countries of a kind of extraterritorial reach, really. So one example would be the UK Modern Slavery Act, which combats certain well, I don't know what to say, certain ways of treating people, but certain ways of possibly in the world of employment of local employees, which are then, despite the fact that the act is happening in country A, is then relevant for as a non-compliance in the country B. Again, in the US, there is legislation. We're talking today about vaccines and so on, but which comes to mind? There is a in the US, for example, there is a legislation related to so-called conflict minerals and so on, where certain things cannot be done in respect of employing people and so on. And obviously, there is always the soft sort of area of all of this. So one is the compliance, the sort of legal side, and the other one is the potential PR side of it. So even if you're compliant in a certain country in respect of health and safety and so on, and something happens despite comparatively the health and safety being possibly poor, then this will obviously trigger a negative PR effect. Maybe just two more things at the very end, for the sake of completeness here, to think about, which may well be relevant for our vaccine example. Export controls, that's always a hot topic for many items, including, I mean, the vaccine example would be for the would be an example where a certain export is restricted of these items simply to ensure that there is a sufficient supply in a given country. And for other areas like electronics and so on, I mean, this is well known that these may be subject to export controls and and so on. And yes, so I think that would be it in terms of all these topics. So what is our conclusion from all of this? Yes, it is difficult, and so I think conclusion number one would be there is an easy way to control all of this. It does, depending on the complexity of the supply chain involved, a compliance management system is required to stay on top of these things. Possibly there are tools like supplier code of conduct, contractual ways of mitigating risks, and similar items. So so the final conclusion from my 25 minutes or half an hour on compliance items would be, if you want to be sure that, or reasonably sure that things will not go wrong in this area, yes, it is a lot of work, and it does require resources, and most importantly, it does require a lot of local knowledge in all these countries where activities are undertaken by organizations. So and that's the first half of all these things to think about, and the second half will now be in the tax area, and I'll be handing over to Priya to cover this.
All right, thank you, Michael. Yeah, so we've spent the most part of the hour speaking about the operational considerations, and also the legal and compliance considerations as well. So now I'm just going to very quickly take you through some of the tax considerations, especially the transfer pricing considerations when it comes to looking at your supply chain. So a group's effectiveness and competitiveness is largely influenced by, in large part, to its supply chain. So a group that that has an efficient but agile supply chain is largely able to optimize its group's effective tax rate, while also minimizing its tax risk. At the same time as well, tax issues can arise throughout the supply chain, and this includes from developing and designing your products, sourcing materials, the manufacturing process, right up to selling the finished goods. And one of the main issues, especially as we deal with multinational entities operating as a group, is the issue of transfer pricing, and that's been a big issue, especially in the last 10 years or so. So whilst transfer pricing can be seen as a major tax issue when it comes to supply chain planning, it also presents a big opportunity for groups to optimize their tax structures. And I will talk a little bit about this. I'll talk about this in a little bit more detail later on. In addition, we would also need to look at the other tax areas, and this includes the corporate income tax, withholding tax, and also indirect taxes such as your GST or VAT, or other consumption taxes. For example, in Malaysia, that would be the sales and services tax. Also looking at customs duties and tariffs. So, and how you can maximize your tax returns, your tax position, by having certain functions in certain jurisdictions to take advantage of any possible tax arbitrage. Another way that you can look at ensuring that you have an efficient supply chain would be to take advantage of any free trade agreements, if any, or if it's on a domestic front, to see if there are any tax incentives that you could enjoy in the local company. And within the ASEAN region itself, there are many tax incentives being offered by the local governments to attract foreign investment, especially in the last year with the COVID pandemic. The Malaysian government has also started introducing a lot of new incentives to sort of attract more investments back into Malaysia. These are especially on the manufacturing front, but also on the services sector as well, and a lot more to do with regional headquarters functions as well. So in a nutshell, basically the tax functions should be looked at together with the trade considerations as well as the regulatory considerations to ensure that your group's supply chain model is as efficient as possible. And can we go to the next slide, please? So looking at this slide, you will see a very simplistic illustration of how having an optimized supply chain can help improve the tax efficiency of a group. So if you look at the left-hand side of the slide, we illustrate a so-called unoptimized model, whereby the brand or the distributor company bears the majority of the risk within the group, and therefore is required to earn a higher return, because from transfer pricing principles, the higher the risk of the company, the higher the return you're supposed to earn. As the brand owner or the distributor is located in a higher tax jurisdiction based on this example, this would effectively result in a higher effective tax rate for the company. But if we look at the optimized model on the right-hand side of the slide, we see that the principal or the brand owner is the party that bears the higher risk, and that's the same as the previous example. But in this case, you have the principal, the brand owner, and it's located in a lower tax jurisdiction. So the role of the distributor here is limited to that of a limited risk distributor. So it no longer is a brand owner as well. It's just limited to being a distributor. So therefore, it should be earning a lower but more routine return. And it is also located in a higher tax jurisdiction. The manufacturer, on the other hand, acts simply as a contract or a toll manufacturer, and again also is a limited risk entity and should earn a limited return. So as you can see from this example here, the principal or the brand owner, which is the entity that is supposed to be bearing the higher risk within the group, should be earning the higher return, and it is located in a lower tax jurisdiction, while the lower risk entities are located in higher tax jurisdictions. So this, we can see, will lower the effective tax rate of the group. So the main difference in this optimized model and the unoptimized model is that we have effectively stripped out the brand and the IP function and transferred this to a lower tax jurisdiction. Of course, this is all very easy and simple to look at if you look at it in this context. In reality, there are many other considerations to be taken into account as well. Well, we have not in this example asked ourselves the question of whether the principal is also the IP and the brand developer. Is it merely the IP owner, or does it also develop the IP? Is it in charge of the research and development and developing new products? One of the main issues that we have not considered in the example is the issue of substance. Does the principal have substance in the low-risk jurisdiction, or is it merely an IP holding company that owns the brand name? What if the IP is developed in another country, but this value is then not appropriately captured within the group? For example, if the IP is to be owned in a certain jurisdiction, the pure finding and or legal ownership is not sufficient to attract the totality of the IP value and therefore the profit of the group. So we should also consider whether there are any other beneficial or adverse tax implications. So as I mentioned earlier, transfer pricing is just one of the considerations. It is a rather big one, but it's just one of it. So one of the other things that we need to consider when we think about shifting around functions to get an optimized supply chain model could be to look into the indirect taxes, such as your GST and your VAT. And also, what about withholding taxes? This withholding taxes presents, effectively a tax cost to companies. So will the shifting of any of these functions result in any neutral indirect tax consequences? And are we able to minimize any withholding tax leakage? What about your customs duties and tariffs? That's also a very important consideration. And also not just from a tax perspective as well, we would also need to think about as well as how the customs authorities and tax authorities in these countries operate as well. So whilst having a supply chain that is successfully aligns a company's business and tax goals, developing a tax efficient supply chain can present a multitude of international tax issues. So one of the main issues with supply chain management centers around transfer pricing, and that's what we'll be talking about as well. So transfer pricing is effectively concerned with the application of the arm's length principle to related party cross-border and also sometimes domestic transactions. So in a nutshell, the arm's length principle is where the terms and prices at which related parties enter into a transaction, and this should also be the same as if the parties were unrelated parties. So when tax authorities look into related party transactions, they are effectively interested in the attribution of income and profits amongst related parties. So the attribution of income should reflect the nature of the functions performed, the level of the risk undertaken, and the assets used. In essence, the tax authorities are trying to determine the value being derived by a company in a jurisdiction and whether the returns, that is the income and profits being derived, is commensurate with its economic value creation. So as we go back to this optimized model, as I mentioned earlier, we need to ask ourselves the question for the brand owner, the principal, is it earning the right return for the value that it derives? So as companies look to realign their functions, assets, and risks, and possibly to shift or to centralize certain functions to a different jurisdiction, we need to make sure that there is compliance with transfer pricing rules and that any transfer of assets and functions are carried out at arm's length, and that profits are aligned with the functions, assets, and risks in the realigned supply chain. So this is a very important factor to consider. So when you realign any of your functions, we move around any functions, we need to look back into what is the functions, what are the assets, what are the risks, and what is the value effectively being earned here. And prior to COVID-19, many businesses were already starting to look into their business models and supply chains. So there were already starting to be supply chain disruptions, and companies were already starting to look at ways to optimize their supply chains. This mainly started largely due to factors such as the trade war between China and the US, climate change. So these factors also caused groups to look into their supply chain models. And then with the sudden onset of COVID-19, the impact on businesses, this forced companies to then accelerate looking into the supply chain models even more, or even pivot their business strategy and the value chain completely. As I mentioned, so before COVID-19, companies were already facing increased attention on their supply chain management due to certain factors such as technological disruption. There were also national protectionist movements, climate change, and global tax changes, largely arising from the BEPS initiative from the OECD. So many companies were already looking at diversifying their manufacturing operations and expanding their suppliers to reduce the risk of redundancy. Another trend that came about was the trend of nearshoring, which is largely in part to climate change measures, and also a lot of companies look to reduce their reliance on China due to the trade tensions between the US and China. So on the tax side, the BEPS initiative by the OECD brought forward many tax and transfer pricing challenges, which forced and continue to force companies to look into their supply chain. So as a result, companies were already forced to look into their supply chain, but this was just accelerated with the onset of COVID-19. So with the onset of COVID-19, then, as we know, many companies now face sudden, unexpected disruption to their supply chain. Businesses were forced to close on short notice, and this had an impact on suppliers and manufacturing activities and the delivery of products. So we also started to see a lot of changes in the functions due to the travel restrictions that were in place. So some of these travel restrictions we saw also changed the functional profile of the company. So you may no longer be a low risk entity because you may not have your management sitting in these entities, for example. Some of these changes could also potentially impact your tax incentives that you are enjoying in certain countries. For example, in Malaysia, you may need to meet a certain requirement of knowledge workers. So these are largely foreigners, these are largely expatriates. So if you don't meet these requirements on a year-to-year basis, that could impact your qualifying criteria for certain tax incentives. So this forced a lot of companies to look into this and to sort of like have to really quickly pivot their supply chain. So whilst the current tax and economic environment has presented a lot of disruption, there is also a silver lining to be found in all of this. So this presented an opportunity for a lot of groups to look into optimizing their supply chain from a tax as well as a transfer pricing perspective. So one of the things you can look into doing is consider whether the changes to the transfer pricing model is actually necessary. It's beneficial to now reevaluate the functional profile and the level of profits for all parts of the supply chain and to analyze which entity is bearing the majority of the risk and functions. It's also necessary to make the corresponding changes to the level of profits in the limited risk entities. For example, your limited risk distributors and your contract manufacturers within the group. The management functions may also shift, and you also need to look into this as well. In looking at these changes, we should also not forget about other tax considerations. So changing or shifting functions could have an impact on the direct taxes, so your corporate income taxes, as well as your indirect taxes. So these changes should be analyzed in totality with the entire structure, because a change in the transfer pricing model will also have an impact on the overall tax structure of the group. And what we want here is to be optimizing the entire tax structure and not just look at one entity within the group separately. Another thing to look at is the pandemic forced companies to quickly do a pivot on their delivery channels. So companies could no longer find that they could no longer rely on a single delivery channel and had to quickly consider possibly an omni-channel business model. This in the immediate term presented an increase in cost for many businesses. So when reviewing your supply chain, you should explore avenues for a more agile delivery model that could allow you to respond quickly to changes in demand, as well as any potential future trade barriers. So understanding the tax implications will help you keep informed about how and where the economic value is created. That is, who bears the risk and earns the return, as well as the corresponding tax costs. On the flip side as well, an omni-channel business model may also give rise to more complex direct tax, indirect tax, and as well as custom duties implications. So as a business, it is important to weigh the pros and cons of a flexible and agile business model against the tax costs as well as the tax risks. And one of the major impacts of COVID-19 was the acceleration of the digital adoption. So the faster and broader digital adoption strategies by businesses should also be considered in line with tax implications. So many countries are already starting to implement digital taxes, currently mainly within its indirect tax framework. However, there are still ongoing discussions happening at the OECD level with regard to a more holistic digital tax framework, and this is likely to come into effect in the next few years. So with this in mind, we also need to understand the broad scope of the impact of digital tax and how it affects the supply chain. Another aspect that we need to look into is the value attribution of IP, which I touched on earlier as well. So what is the placement of your IP? So as I illustrated in this optimized example, you may want to consider moving your IP to a lower tax jurisdiction, but is merely moving the IP sufficient from a tax and transfer pricing perspective? You need to examine and review the IP used and developed throughout the supply chain and align the tax considerations accordingly. The IP should be evaluated as part of the business model in light of the changes to both the value and nature of the IP, while also considering tax and regulatory considerations, for example, tax avoidance. Any changes to the IP model or the IP structure could likely trigger by the risk and the value drivers, the brand value, the product development, and the know-how, for example. So overall tax implications again need to be considered as part of any change to the supply chain. As well as moving IP, another thing to consider is they could have capital gains implications depending on the jurisdiction. So in line with all of this, the most important thing to consider is the issue of substance. So depending on the jurisdiction, there could be different tests to the functionality and risk that are required to be moved to a jurisdiction in order for a business to shift profits to that jurisdiction. In the case of intellectual property, it may not be enough to move the ownership of the IP, but the management of the IP may also have to move for you to have substance. As mentioned earlier, the pure legal ownership of IP may not be sufficient to give the totality of the IP value. The people driving the IP creation, the maintenance and the enhancements that need to be done in the same jurisdiction as the ownership. Otherwise, the IP ownership alone should, by right, earn a lower return. So once decisions have been made with regard to any changes to the supply chain model, companies should make sure that the intercompany agreements support these changes. So these agreements should appropriately reflect the new financial and commercial conditions throughout the supply chain. So thereafter, once you've updated all your agreements, your transfer pricing models and your transfer pricing documentations should also be updated to reflect these changes. So just as a final point, just to wrap up, so the current, as we know, current business environment, it requires companies to be and remain very agile. So gone are the days where you could have a very simple supply chain and rely on this year in and year out. So you now need to be agile and be efficient, while also taking into account all the changes in the international tax environment. So as these changes drive significant changes in the business strategy and accelerate digital adoption, the tax and transfer pricing model also plays a central role in managing your supply chain models as well. And so therefore, the tax and transfer pricing considerations should not just be a last thought, but it should come holistically together with the trade and legal considerations as well. So by making sure that you ensure that you have a tax efficient supply chain will not just help you manage your group's effective tax rate, but it can also potentially mitigate tax risks. So there are a lot of tax opportunities to be taken from relooking at your supply chain as well. And with that, I have finished my presentation. So I will pass it on back to Bettina for the Q&A session.
Thank you very much, Priya. I'll be with you in a second, hopefully. Yes, here I am. Thank you, Priya, and thank you very much as well, Michael and Felix, for all your explanations and your very detailed insight into all the various considerations to be taken into account when it comes to supply chain management and transfer pricing. So we will be happy to move over to our Q&A section. And I see I have some questions to hand over to my dear colleagues and to Felix. So let's start with the first one. Michael, you pointed out the various compliance risks to be monitored when it comes to an international supply chain management. So here's the question. In light of the highlighted compliance measures, when can my company be held responsible for the actions of third parties, such as suppliers or other business partners?
Yeah, that's a good question. So the best example here, I suppose, I mean, the first part of the answer would be not very satisfactory, but it's always the way. It depends on the particular case. It depends what sort of country it is and where the claim is brought and so on. But the classic example in this area would be these days would be the anti-bribery and corruption thing. So again, it depends on what country we be talking about here, but in many countries, and I just highlighted you know, the US and the UK and Malaysia, for example, but there will be many other countries. There is legislation in place which says that all unlawful activities, not just done within the company, but also done on behalf of the company, can be somehow attributed to the company itself and also its senior executives. not necessarily just limited to directors. So basically, in plain language, it means if there is, let's say, a consultant or an agent or someone like that who pays out some inappropriate funds, for example, to secure business, then this can mean that a senior management of the company, which then gains an advantage from it, goes to prison. That's the worst kind of case scenario. In certain instances, also without even knowing that happened. So it's enough to sort of say the organization has not prevented it from happening. It's sufficient to secure a conviction here. So that would be one example, which is sort of currently a hot topic. The other one, if you look at the it sort of depends what do you mean by when can I be responsible. So we had also the example of someone attaching the product liability example. So someone simply attaching a brand to a product which is manufactured by someone else, and then this resulting in a product liability claim. So then effectively the person with the branding, the organization with the branding, can be held liable for the manufacturing defect of the manufacturer, which may be somewhere else. So that would be the two examples which come to my mind.
Thank you very much. Bria, I have one more question for you, I'd say. You talked about the implications of transferring IP to a low-tax jurisdiction. Could you go into a little more detail with that, please?
Yeah, sure. So when you're looking at transferring IP, of course, there's the value of the IP itself that you would need to consider first, and whether it's a diminishing value or whether you should apply a value that is increasing. So it goes back to, we would need to look into how you're developing the IP, what is the R&D that goes into it, and whether it should maintain a flat rate of return throughout the years, or whether it should reduce because you develop new products over the years. So, you know, these older models, they should not maintain the same value. So that's one of the things. And we are looking at transferring the IP. We need to look at what exactly in the IP we are considering to transfer. Is it, again, just the ownership of the IP? Or are we also transferring the R&D function as well, or the management of the IP as well? So those are things that need to be considered. And from a tax perspective, a lot of countries have capital gains tax. So when you transfer the IP, we will also need to look into capital gains tax implications as well. Or if it's not capital gains tax, will there be any income tax implications? And what about GST and VAT as well? So these are certain things that you would need to look into when considering transferring IP.
Thank you very much. I see it is the complex issue to be monitored and controlled. Felix, I think this one's for you. You quite detailed looked at all the impacts of the COVID-19 and its disruptive effects on supply chain management and on logistics in detail. What do you expect, or how do you think the second wave will influence the markets?
I think the second wave is influencing it right now. Once again, we have companies that are in shutdown or are not producing as much because they've scaled down the production facilities. This is not only a local problem, but a global problem. So already you see shortages in supply, shortages in demand. We have Chinese New Year coming up in addition to that. So once again, the space becomes an issue, or already is an issue. We still have, and I've mentioned that earlier, the congestions in the ports, which again makes booking or container availability a problem, as well as air freight space. So once again, we see the prices of freight not going down quite quite the opposite. It's very much a fish market mentality, whereby you can, it really is like that. You buy a container for 8,000 this day, and tomorrow it's 10,000, and or the other way around, which is even worse, because then you kind of stuck there making $1,000 loss on a container. You know, really, in short, it's a fish market mentality. What you have, and you really have to pay for space at the moment, and that's. I think there's a lot of communication at the moment, or a lot of anger within the market, and not only by the shipper or the consignees that are not receiving goods, but also by the forwarders associations, the clear cut for Europe specifically, where carriers are actively scrapping contracts and not sticking to agreements, or really enforcing the fish markets by not supporting their agreements. And yeah, I think we somehow have to get through it. I think the carrier environment is not helping it, because we are talking about oligopolies there, and that is not right. And but yeah, I think in short, I don't think we see a relief until at least another 4 weeks. I don't know how after Chinese New Year will develop, but I do hope it will free up some space during Chinese New Year.
Thank you very much, Felix. And taking a look on the time, I'd say we come to a close here. Thank you, everybody, for attending. Thank you very much, my dear colleagues, and thank you, Felix, for sharing your professional insight on this really, really complex and very topical issue of supply chain management in times of COVID-19 and Brexit and change of power in the United States. It's a wild time, and I think we are all making the best of an effort to keep a hold on everything that needs to be taken care of. Should any of your questions have been left unattended due to time issues now, or should you come up with questions later on, we will of course be happy to answer these in a bilateral way. Just drop me an email and I will be happy to liaise with everybody of our expert team. This session has been recorded and will be made available online later on for you to recap. And of course, as usual, should you wish for a copy of the slides, please just drop me an email and I will be happy to share these with you as well. So thank you very much to everybody. Thank you very much, Priya, Michael, and of course, Felix, for joining us today. Thank you, everybody, for attending. Take care and stay safe and heads above water in these stormy times. Thank you.
Thank you.
Thank you.
Thank you.
Bye-bye.